Recently, with the market in an absolute spiral downward, I've decided to adjust my investment strategy quite a bit. Bearish markets call for a different approach to investing, with more of an emphasis on longer term projects that can wait out the absolute bloodbath that we're witnessing right now. See, what most people get wrong during these times is they give up on investing altogether because, during a bear season, investing's really hard. You've lost a lot of money. It seems like every day you're getting more and more bad news, and mentally it is a lot to handle, and it's really hard to invest during a bearish season. It's emotionally counterintuitive to be investing money after you've lost so much money. But traditionally, those people that do end up having that emotional fortitude to be able to buy at the bottom are the ones that are able to accumulate a lot of different projects at rock bottom prices, and the next time the bull run comes around, they're the ones that end up making a fortune. But not everyone who buys projects at the bottom ends up making money. There are a lot of projects you can still buy at the bottom and end up losing money because those projects never end up recovering. So you have to be investing in the right projects that are going to end up recovering next time a bull season comes around. And traditionally, the safest projects to invest in that are going to be like this are going to be blue chip crypto projects. And so I've been paying a lot of attention to blue chip crypto projects, particularly focusing on Ethereum. And I have a very particular reason why I'm focusing specifically on Ethereum that I'll talk about in just a second. The last bull run we saw kicked off with Bitcoin going from 3K all the way up to at one point almost $70,000. And during the first stage of this bull run, what we saw was Bitcoin was going up and up and up, but a lot of the altcoins weren't moving as much. They weren't moving pretty much at all. And a lot of people were like, why aren't the altcoins going up? Why is it just that Bitcoin's going up and none of these other projects are actually going up in value as well? But then finally, as Bitcoin kept climbing higher and higher, people felt like they'd missed out on Bitcoin, so they started exploring all the different altcoins and alt projects, and then finally we had alt season where all those projects started taking off as well. And this is typically how the cycle goes. First, Bitcoin takes off, then we see projects like maybe Ethereum and maybe some bigger blue chip projects start to take off, and then we have altcoin season where a lot of the smaller projects end up taking off. And as I mentioned just a second ago, this comes from the fact that after Bitcoin takes off, you have a lot of people that missed out. They start speculating on what the next thing to take off will be. So then they naturally kind of gravitate towards Ethereum and some of the other bigger blue chips. And then when those things start to take off, then people are further speculating, well, what about some of these really small projects that people haven't really been paying attention to? Maybe they're going to take off and be the next Bitcoin, or maybe they're going to be the next Ethereum. And so you start to see people gravitating towards smaller and riskier projects over time because they feel like they've missed out on some of the bigger projects and they want to get those same kind of life-changing gains. And that's traditionally been the Bitcoin cycle, and this cycle has always revolved around the Bitcoin halving. So every time Bitcoin halves, it kind of kicks off the cycle, and then things start rolling. Bitcoin starts going up, moves on to the blue chips, moves on to the alts, and so on. But this next time, I think it's possible we'll experience something very different. A new narrative is starting to be spun around Ethereum that I think could have massive implications for Ethereum and the wider crypto ecosystem as a whole. In fact, I think this new narrative is so powerful, it could skyrocket Ethereum to the #1 spot, making it the largest crypto on the planet. Now, I'm hoping to use this narrative to turn Ethereum into the best bear market savings account in existence. The new narrative revolves around bonds, Ethereum's 2.0 upgrade, and the state of the current market. And this might all sound a little bit confusing at first, but I think it's worth it if you're somebody who's wanting to learn about different ways and tactics to make money during the bear market and potentially how the next, couple of years in the crypto market could unfold. Bonds, which are typically where really big money puts their money to protect it against inflation, are currently at a negative yield when you account for inflation. Put really simply, if you invest in bonds right now, you're actually losing money, not making money because of inflation. People still invest in bonds, however, because it's still a better option than leaving it in the bank and letting it get hit even harder by inflation. And this is where Ethereum 2.0 comes in and kind of flips the script. Once Ethereum 2.0 goes live, you're going to be able to stake your Ethereum and receive about 9% annual interest. Some people even say that 9% is actually kind of low and conservative and that it could be potentially even a little bit higher. On top of that, post 2.0 going live, every time the GUI, which is like the Ethereum gas cost, is above about 20 GUI, Ethereum should be theoretically burning more Ethereum than it's producing. therefore becoming deflationary. And if you aren't familiar with Gwei or Ethereum gas costs, essentially it's always over 20 Gwei. So it's very likely that post 2.0, Ethereum should be a deflationary asset, which means Ethereum will allow investors to make about 9% annually from staking, all the while being a deflationary asset that's potentially going up in price. And because of this, some people are saying that Ethereum 2.0 is kind of like a better version of a bond. And this narrative is starting to gain a little bit of traction. We've seen Bloomberg talk about it. We've seen Zero Hedge talk about it, as well as guys like David Hoffman and Ryan Adams who have been talking about this for a while now. Imagine if you had $1 billion. Well, you can't just leave your $1 billion in the bank because then it's going to be hit by inflation. Recently, inflation was as high as 8%, which means you lose about 8% having it just sit in the bank. So you have to find a place that you could actually park this money where ideally it's going to produce a yield. That's where Ethereum 2.0 starts to look pretty tempting with its 9% interest and it being a deflationary asset. Also consider the current narrative around Bitcoin is that it's like gold 2.0. It's a better version of gold. And that puts its theoretical growth potential at around $11 trillion because that's the current market cap for gold. But if this new narrative of Ethereum being a better bond ends up panning out, well, the bond market is around $100 trillion in total market cap. That's about 10 times bigger than the total market cap for gold. So that would theoretically give Ethereum a lot of potential for growth, especially considering it's currently only sitting at around 278 billion in market cap. You're probably asking yourself though, how does the average investor benefit from all this? A lot of us are familiar with Anchor Savings, which used to be a pretty neat way to generate around 20% annually on your USD. Of course, currently there's some craziness going on with USD and Luna, and that's not such a sure thing anymore. But pre all this, it was basically the go-to savings account for all of DeFi. And 19% is a great yield on your investment. But with Ethereum, I think I could potentially make quite a bit more. Essentially, if I were to invest 10,000 into Ethereum versus 10,000 into Anchor, my outcomes could look like this. $10,000 into Anchor after 1 year at 18% would mean at the end of the year, I'd have around $11,800. $10,000 into Ethereum after the year, however, is a lot harder to kind of guess what it would be worth. Would my $10,000 be worth 9,000? Would it be worth 5,000? Would it be worth 15,000? It's really hard to estimate after just a year what my Ethereum would actually be worth. So instead, let's kind of zoom out and look at a 5-year period. My $10,000 in Anchor over 5 years, assuming everything goes well and USD doesn't depeg, would be worth $22,877. That's again assuming that it stays at the 18% rate. However, if I had that same 10K in Ethereum over the next 5 years, I think the results would be very different. Again, it's impossible to guess exactly what Ethereum will be worth over the next 5 years, but I would be willing to wager that over the next 5 years, Ethereum is worth at least triple in value what it's currently worth today. We of course can't know that, but I don't think it's that insane of a prediction. I think most people would agree that that is at least plausible and, somewhat in the cards for Ethereum over the next 5 years, especially considering that post 2.0, Ethereum should be a deflationary asset, which should, slowly drive the price up over time. That would put my $10,000 invested at around $30,000. Plus, let's assume that I had it staking at 9% for 4 of those 5 years. That would put my total at $42,347 or around 400%, meaning I could potentially make almost double what my Anchor would produce investing into Ethereum versus investing into Anchor. And that's one of the plays that I'm using during the bear market. It seems mildly safe considering Ethereum's been around for a decent amount of time at this point, and it has a potential upside that if this narrative really plays out, Ethereum could go quite a bit higher than just a 3x over the next 5 years. For example, if Ethereum ended up taking over just 3% of the bond market, that would make my initial $10,000 worth over 5 years $127,042. Of course, we're talking about investing into a crypto asset for years, and a lot of people don't have the patience for that. They want to jump into more of the degen, projects and hope that, they could turn $1,000 into $100,000. But unfortunately, during a bear market, that's a lot more difficult, if not near impossible to do. The market just doesn't function the same way it does in a bull market during a bear market, and you have to make a lot safer plays during a bear market than you do in a bull market. And besides that fact, with degen projects, while you can make life-changing gains, obviously, oftentimes most people have a really difficult time holding on to those gains, where, maybe their account does go up 10x or 20x on paper because it's difficult emotionally to actually capture those gains. gains, most people end up never taking profit and actually end up far worse than they began with in the first place. So during a bear market, you have to gravitate towards the less exciting but still lucrative strategies that end up functioning long term. And for me, one of those strategies is going to revolve around Ethereum. I don't know if it'll end up working out. A lot of it is kind of dependent on this whole narrative of Ethereum as a better version of a bond actually playing out. Narratives are powerful forces that are able to move markets, but it's kind of really hard to predict how those narratives will take shape over time, if they actually will take shape, or kind of what will happen with those. For example, Bitcoin started out as a better version of a currency, and people envisioned using it to buy like all sorts of everyday items, and then over time it evolved into a better version of a store of value, where people are seeing it as like the new gold 2.0. But in reality, a lot of Wall Street actually trades it more like a tech stock than they do a store of value. So it's really hard to predict how these things will end up playing out. But I think this idea of Ethereum as like a better version of a bond is a really sticky idea that I think could have some traction, and really we could see it come to life over the next few years. I'll also say that I think it's possible that when the Ethereum 2.0 merge actually happens, it could be a Bitcoin halving level event where we see all kinds of news articles, all kinds of people talking about Ethereum 2.0, causes a lot of buying frenzy, causes a lot of people to not want to miss out, which would cause the price of Ethereum to really skyrocket and go up in value, which could potentially cause a new bull run as people are trying to buy Ethereum and it's going up in value. I would imagine people would then say, oh, I missed out on Ethereum. What else could I buy? Oh, what about AVAX? Or what about Solana? Or what about Polygon? And then people start buying up all these other network type projects, and then that would slowly drip down into the alts and so on and so forth. As always though, none of this was investment advice. None of this was me telling you that you should go buy Ethereum. This is a strategy I'm trying. It's unproven. I have no idea what's going to happen. I have no idea if this will actually be adopted. You should take whatever I said with a grain of salt, do your own research and decide, does this make sense? Does this look like a narrative that really could, pan out? Or does this not make sense and doesn't look like a narrative that you believe will pan out? At the end of the day, you always got to make your own bet. You always got to take your own risk, and you always got to kind of decide on your own. I'm just a guy on YouTube that talks about what he's up to and what I'm doing with investing. And, I make a lot of mistakes just like anyone else. So take all of this with a grain of salt. Good luck investing. If this video is helpful, make sure to hit the like button. If you have any questions or comments or want to add to this narrative, let me know in the comments down below. And if you want to see more videos like this, make sure to hit that subscribe button, but you got to also hit the little bell next to it if you want to actually be notified each time I release a video. Thanks for watching, and I'll see you next week.